Hello and welcome, What the Finances, to another episode of the What the Finance Podcast, where we talk to experts to help gain a greater understanding about what is happening in the world of finance, investing, and markets. On today's podcast, I'm happy to welcome Marc Faber, who's an editor and publisher of the Gloom, Boom, and Doom report, which I think is a great name for what's happening at the moment. So, Marc, thanks for joining the podcast today.
It's my pleasure. Thank you very much for having me on your program.
No problem. And I'm really looking forward to our conversation. So my first question, yesterday...
I'm not sure your viewers will like
it. Yeah, maybe afterwards we'll be a bit depressed or it'll be a bit
yes.
Not very good. But yesterday the Fed, they continued increasing interest rates. There was sort of thoughts they might pivot. We haven't seen that yet. And it looks like they're as hawkish as they've ever been. So in your opinion, do you see the Fed that they're destroying the economy with continued increase in interest rates, or what's your opinion on that?
Well, I just want to say one thing. People talk about the hawkish Fed and the hawkish ECB and central banks and so forth. We have to look at this matter in the perspective from a longer term point of view, because today we have a generation of people who grew up amidst artificially low interest rates that were distorting economic life. In other words, you had in Europe you had negative interest rates. Okay, negative interest rates is a kind of a absurdity that arose out of the so-called modern monetary theory and so forth, which is not modern at all, because it was already used. The example of negative interest rates in the 1920s by a German-Swiss economist called, the name will come back to me, Gesell. His name was Silvio Gesell. You can look it up on the internet. Anyway, he advocated negative interest rates as a way to penalize people with money, in other words, people who had deposits. And also it became kind of a Keynesian view that in order to stimulate demand, you could sort of introduce artificial low interest rates, which then penalizes people to have large deposits in the banking system. In other words, you discourage savings, period. And in Europe, we had since 2011, up to last year, actually up to this year, negative interest rates. This is criminal in my opinion, because it led to a lot of inflationary symptoms like asset inflation. And in the US, we had next to zero interest rates since 2011 and massive money printing. And this then kept interest rates artificially low for far too long. And when inflation began to manifest itself, long before Ukraine, the central banker says, they all say, oh, it's the war where interest rates increasing and inflation is increasing. Began long before that. In any event, the adjustment recently is in terms of percentage increase huge. The 10-year Treasury note went from 0.57% in May 2020 to now over 4%. A huge increase, I mean, percentage-wise, in a short period of time. But when you talk about hawkish, you're saying interest rates on the Fed fund rate at 4% is hawkish. When inflation is at 9%, you must be joking. Interest rates should be at 9.5%, 10%. In 1969, when inflation had begun to rise in the late 60s, the 10-year Treasury note was over 9%. It then dropped to a yield of about 3.7%. And then in 73, 74, it went up, the 10 years Treasury note, to over 12%. But inflation was not higher than it is today, okay? And in Europe, this criminal called Lagarde, she's in charge of the ECB. Why she's in charge, nobody knows, because she has no clue about monetary matters, but she was put there by some people behind the scene. So anyway, she's there, and until a year ago, she said, oh, inflation, it's not a problem, it's temporary. And now she has interest rates at 0.75%, when inflation in the EU is over 9%. And you tell me they're hawkish? No, they're not hawkish. They're incompetent. Criminal. A criminal is someone who steals money. The central banks have stolen money from honest people who had their money on deposit. Because if inflation is 9% and your deposit rate is, say, 4%, you still lose 5% per annum.
Yeah, which is crazy to think. So do you think they were too slow to react?
Well, let's put it this way. In the 1930s and already before, we had the rise of the mafia, which was largely due to the prohibition time. So it created a black market and a second economy, a black economy or underground economy. The government won it, and then they adopted the methods of the mafia. So the idea of the mafia has taken over Washington, D.C., and politicians do nowadays, although they're democratically elected, they take measures that are dictatorial. And this was financed by central banks, period.
Yep. So you think they were too slow?
So maybe you read, your viewers are feeling a bit depressed. I also want to add one thing. I started to work in 1970. So I experienced the tail end of the 1969-1970 bear market. I then experienced the 73-74 bear market, the 81-82 bear market, and the bear market, the crash in 87, and the bear market in Japan after 1989, and the Asian crisis, and the bear market 2000, 2001, and the great financial crisis 2007, 2008. In each these instances, stocks went down, but treasury bonds rallied. Now, this year, or starting a year ago, treasury bonds have gone down and stocks. In other words, if you had a mix of bond stocks in previous recessions, bear markets for stocks, bonds gave you some protections because they rallied. This time around, both went down. This is most unusual.
Is this time different then?
Well, nothing is so different. Bubbles burst, and this was a bubble. The Fed denied the fact that this was a bubble, and they are still in denial. Powell also underestimated the severity of the inflationary pressures. But you see, the Federal Reserve and like the ECB are political institutions. They'll do what the voters tell them to do. Now, to be fair to Biden, he probably gave the approval to tighten, but he has to, because the government's action. I'd like to make a statement. Inflation is always due to governments. 1800 to 1900 in the US, the federal government was very small, no inflation. We didn't have a central bank, no inflation. The moment, your viewers, I suppose you told me most of them are younger people, they should go back and look. They can enter on YouTube Milton Friedman. Milton Friedman gave several interviews and speeches in the 70s, okay, during an inflationary period. Milton Friedman can say in 20 minutes as much as these idiots at the Fed in 3 hours. He's very concise, very precise in his statements, and he's an economist with common sense. You can't say that of any of the Fed members. And so I recommend your viewers to look at some of these, actually at all. They can, in 1 week, they will have a very good feel why inflation happens. It's always because of governments, always. Now, I agree with you, if the weather is bad and the crop in Brazil for coffee has a freeze or whatever, then the price of coffee will go up in the following period. But it will then fall again once the weather improves. You understand? That I don't call necessarily inflation. But when across the board prices go up and people misunderstand, they think inflation is when the price of bread and butter and meat and so forth goes up. This is inflation. When stocks go up, they don't think of it as inflation, but it is a symptom of inflation when stocks go through the roof. It's always a monetary phenomenon combined with government spending.
So do you think, as you said, the low interest rates that we've seen over the past 10 years, the slow Fed to respond, as well as other central banks to respond to inflation, and the ridiculous amount of fiscal spending that all governments have done during COVID, do you think that's where this inflation has come from?
It came from massive fiscal deficits. The latest bout came from a huge federal deficit in the quest to fight COVID, which was man-induced, government-induced. It didn't come from a fish market and meat market in Wuhan. It came from laboratories, very clearly. And it was used as an excuse to spend a lot of money and to lock up people, to control people, and so forth and so on. But who is responsible for all this? You think any of these government clowns will ever go to prison? No, they get promoted. The worse you are in government in terms of your ability, the higher you will go.
Yeah, so we see, as we've mentioned, inflation is high, interest rates aren't high enough. So do you think the Fed should keep increasing interest rates, or will that just collapse the economy, or has it already collapsed?
In my view, it has collapsed already. But you understand, statistics are made by offices. And if you look at politicians today, they all lie, all of them. And why should then the statistical office of the US be honest? They're all liars. And politically, they can show the economy is expanding. Yeah, look, if I send a check to each American, $1,000 present tomorrow, then they go and spend it, then GDP goes up. Is this honest growth? My government debt has gone up by $1,000 per capita. So you can do a lot of fiddling around with the economy. The reality is most people today, and we have statistics published by the Federal Reserve, people who are 35 years old, they earn less than their parents at 35 years of age, and they have less money than the parents had at 35 years of age. Statistics published by the Federal Reserve. Everybody can go and look it up.
Yeah, so why do you think we've already had a crash or a recession, in your opinion?
Well, first of all, now I travel less, but I used to travel a lot. But I'm an observant economist. If I go out and I see that traffic is half as much as it was before, and if I see that restaurants are half empty, if I see that coffee shops and so forth are not full, and if I see that people are struggling to pay their debts, if they increase the credit card debt is very expensive. It tells me that things are not all that great. So to answer your question, and then the US is maybe better off, but in Europe, there are lots of layoffs, and a lot of layoffs will come to the US. And another thing is, of course, we had the crash in 87, which was from the peak in August 87 to the low. I think it was in November 87. It was 41%, but it crashed in one day by 21% in October 87. But that didn't produce a recession. But normally when stocks go down by 30% or so, and the leaders, they drop by 70%, then you are in some economic contraction, usually. But as I said, in inflationary times, you can hide a lot of things. You understand? There's a money illusion. So someone may get a higher salary, but he may have less money because the prices have gone up more than his salary increase. Now, for a while, he can say, okay, this price of this restaurant has gone up a lot. I don't go there anymore. I go somewhere else. Or the price of beef has gone up a lot, so I buy more pork and chicken and so forth. It's possible to avoid a little bit the high price increases. But if you have two children and they need clothes and they need to go to the school, it's more difficult to cut down on school expenditures.
Yeah, definitely. So do you think because the US dollar is very strong, and I guess I might push back on when you say not many people are out. I was traveling around Europe this summer, and lots of American people who, it was a lot cheaper for them because their US dollar was a lot more valuable against the euro. So I feel like that may be pushing these economies. But do you think when the US dollar strength decreases, once it goes down, that will have a massive effect on inflation in the US and the economy?
I think so. I mean, this dollar strength I observed before in the late 60s, the dollar was hugely overvalued against European currencies. And American soldiers in Europe who were stationed there, they lived like kings. They had sports cars and this and that. I mean, huge spending power. And all the good-looking girls were running after the American boys. And then it changed massively, and the dollar, in my view, will go down at some point. But it's difficult to say it will go down against the euro because, as I explained, if in Euroland, in the Eurozone, you have interest rates at 0.75%, and in the US is 4%, then people rather own assets in the US than in the Eurozone. But I think, and this is a view that I have for a long time, I think that one way to avoid this dilemma of different currencies is to hold some of your assets in precious metals, gold, silver, platinum. And I'm quite optimistic about platinum.
Yeah, that's interesting because if you think about if you're from the Eurozone, and even if you held stocks in the US, they went down in value, but you're probably up because the US dollar appreciated so much compared to the euro.
Well,
very relative.
The euro this year is down 12% against the US dollar. So the stock market has gone down more. But I agree with you, for a euro holder of assets, he was better off by being in US equities than in euro equities. Euro equities have underperformed the US. But there are markets that are up this year. Turkey is up something like 30% or 40% in dollar terms. And Brazil is up. And I'm quite optimistic about Brazilian and Argentine stocks and bonds. So there are opportunities. Also, Singapore is not down hugely. Thailand, the market has performed okay, but the baht has been down. So, from that you lost something. But it's not universal. I think the last 20 years have been very good for index funds. I think indexing will be bad because indexing is concentrated in the big market cap stocks. I think active management will make a comeback, especially value investing.
That's interesting. So, and you've mentioned a lot of countries there, emerging markets, a lot of them are quite reliant on commodities as well. So do you feel like that's where
Yes,
potential growth could be?
Also geopolitically, I think Latin America is more neutral and will likely not get involved in another war right away. They may get involved in a war at a later stage. But I think that may be something to consider. Where do you want to be if there is a war? I have some friends, they're very wealthy, they're young, they're say quite attuned to what is happening in the US. They're convinced the US will go to war with China. Well, if they could go to war deliberately, I put this down, deliberately, against Russia and specifically Putin, because they just don't like Putin for whatever reason, they can also go to war with China.
Yeah, I think I saw some people, they have their bunkers in New Zealand, the very south of New Zealand. That's where they think they'll be safe. Very wealthy people.
Yes, but when war breaks out, they may not be able to travel to New Zealand, except maybe on a raft like on Tiki.
Yeah, get the oars out, get the paddle.
I think you need to be safe where you are. You can build your bunker in your New York apartment or whatever.
Yeah, that's funny. So do you think we'll see interest rates to 8% in Europe?
Not right away, because an example of the uncommon sense economics that we have nowadays is the Bank of Japan. They said, okay, the 10 years Japanese government bond, the JGB, we peg the rate at 0.25%, okay? Now, the bond is pegged at 0.25%, but other bonds, of course, the interest rates have gone up and inflation has gone up in Japan and the currency has collapsed. So are you happy with that monetary policy? It's a disaster for the Japanese people. You said before, oh, the Americans can travel to Europe. There are lots of Americans in Europe because it's cheap now. In Japan, it's now much more expensive to go anywhere. And the Japanese statistical office, they of course also lie, because the cost of living in Japan is going up a lot. Since they import so much food, they import so many goods, everything has become more expensive.
Yeah, that's interesting. So you think as well that maybe CPI is not a good measure of inflation?
The CPI offices in the US, it's compiled, I think, by the Bureau of Labor Statistics, and in each country they have offices They employ thousands of people, thousands of useless economists and statisticians. And I'm sure they have, in the US, the CPI, the way it is compiled today, is completely different from what it was compiled in the early 70s. They started to make changes in the 70s to keep the rate of inflation down statistically.
Yeah.
Look, to your viewers, I recommend to watch a few movies that were made in the 50s. And these movies relate frequently to like America around the turn of the century, or America during the Civil War, or after the Civil War, or during the Depression, or during the booming 20s. Then there you cannot lie. In these movies, they show sometimes the prices of menus in restaurants and the price of a room in a hotel. Okay? So in those movies, you can see you could go and rent a room for $1.20 a night in a hotel. Not a luxury hotel like the Waldorf Astoria was at that time, and so forth, and the Ritz in Paris. But just to say, I have menu cards of McDonald's and Kentucky Fried Chicken of 50 years ago. The price level has gone up much more than what the consumer price index would suggest. Much more. The salaries have also gone up a lot, but lately not that much.
Yeah, it's fascinating. So do you think we'll have a hyperinflation? Will it be sort of similar to the Great Depression, as you mentioned there, or will it just be a slow grind down?
Look, one of the Fed chairmen said, inflation is like a toothpaste. Once you let it out of the tube, it's very difficult to put it back in. And I think that we have today a system of a social system where governments want to be re-elected by offering comfort to the voters. In other words, you have a problem, I want to be re-elected. I say, okay, I will solve your problem. We have an inflation problem. I give you more money. So I send you a check for $1,000 because the gasoline price has gone up. You think it solves inflation? It perpetuates inflation. It increases inflation because I hand over money to you and I print it. And we have Social Security. And Social Security is adjusted to inflation. Cost of living allowance adjustments, COLA. Now this year they go up a lot. Biden, of course, he claims it's because of me. Nonsense is built into the Social Security programs, this cost of living adjustments. But of course, the adjustments are less than the real rate of inflation, but it goes up, so people have more money to spend. So you understand, the system is so much entrenched into having to have some sort of inflation and having to print money, because now the pension funds are in deep shit. They all fell a lot, so they have huge unfunded pension fund liabilities. These unfunded liabilities are going to be very painful unless you can refill them with printed money. But I want to make clear, in the 70s, that's why I mentioned the movement of interest rates between 69 and 71, and then between 73, 74. and the low in 75, 76. When in the cycle of inflation, things move up over time, but they don't move in a straight line. They move up and down and up and down. The 70s commodity cycle was high grain inflation, 71 to 73. There were food shortages. But then wheat, corn, soybeans all peaked out in 73. They never made a new high in the 70s, okay? Then came cocoa and coffee. They had a bull market until 77, and then they collapsed, and it was over. Precious metals, gold, silver, platinum, and also copper, accompanied by the energy bull market. The energy bull market started in 73, and then with interruptions, it went down a while after 73, but then it shot up again. It peaked out in 1980, the energy bull market. Precious metals bull market peaked out also in January 1980. I remember because they collapsed, it collapsed massively. We had lots of margin calls. Anyway, and so to say, are we going to go into hyperinflation? I think, based on the politicians I see that we have, in my view, this is the lowest quality of politicians we could have. It's like the kings. Occasionally there was a king that was mad. This is the quality of politicians we have today in the Western world. They're mad. They belong into an asylum for psychopath. Anyway, with these kind of politicians and with a group of people who want to rip off the system, that is clear to me. Some people, they want to sort of destroy the white Judeo race and install whatever they dream of. I have no idea who exactly these people are. You know, I could say, well, the deep state. Yes, in America, we have the government, but then we also have the CIA, the FBI, the Homeland Security, the State Department. These people operate quite on a different level. To clean this up is not so easy. Mr. Trump, he was drowned in this swamp.
Yeah, it's interesting. So if we go to, you mentioned before, commodities, specifically precious metals, gold, silver, platinum, copper, maybe palladium. So why do you think they're going to go up, and why are you very positive about platinum as well?
Well, I'm not very positive about precious metals. I just think that it's in today's world that is badly managed by people that really shouldn't be looking after governments, that it's a relatively safe investment, provided these idiots in governments don't take it away from you. If they could lock you in and give you a fine if you smoked in your own house or in your garden, then who knows what they will do next. That I don't know. That's why I advise people to be diversified, own some real estate, own some stocks, own some cash and bonds, and own some precious metals. And young people, they all have Bitcoins and stuff like this. And most of them have lost money. And a few, they've made money because they were very early investors. But these are not small investors. These are usually, you could say, the people that invented Bitcoins are probably about the same people as the people who created the Federal Reserve in the US. That is, I think, a very high likelihood.
That's interesting. Is there anything that you mentioned a few countries before? is there anything that you are positive on? Is it those countries?
Yes,
Yep.
I think I'm positive about Hong Kong because everything looks so bad. And this is the criteria to buy something when even the contrarian are very negative. I mean, everything is not one single good news about Hong Kong. The only thing I can say is very seldom that everything looks as bad as it does about anything as it does now about Hong Kong. And therefore, prices are low. Now, if I tell someone, buy Hong Kong, they will say you're crazy because of this, it won't go up. Now I tell him, yes, you're right. Everything is bad, but that's why it may go up. At the beginning of the year, I wrote 3 times about Turkey. I said the currency had collapsed and stocks as a result of the currency collapse had become cheap. Then, of course, someone with connections to Turkey said, you must be crazy to buy Turkey. They won't move and everything is bad and Erdogan is an idiot and so on. I said, it may be that Erdogan is an idiot, but he's in good company in the world. But I don't think he's an idiot at all. I disagree with him, with his economic policies. But the fact is, at that time, Turkish stocks had become cheap. The Turkish fund went now from 18 to 27. And where are the Dow Jones and the S&P? So one went up almost 40%, and the others went down 25%. So I'm just trying to explain, if you just look or invest according to what is good, you will always pay a high price. You should always invest into the worst type of things. That's where the big gains come from.
Yeah, I think Howard Marks, quite a well-known investor, recently said you should look at the uninvestable opportunities that people don't even look at.
Yeah. If I were young, I would go now to Russia and look for some assets in Russia. Or in Mariupol, in Ukraine, or I don't know. I mean, I'm sure there's some opportunities. Look, wars are made by people who want to make money. Don't ever think that ordinary people don't want to go to war. Ordinary people want to stay in their homes, watch TV, look after the garden, look after their businesses, go out drinking and whoring and whatnot. Nobody wants war. Only rich people want war. People sitting in an armchair in Washington, a coward like this Victoria Nuland, who's never been in the military, never in the army, never done anything except government. She wants to go to war because she doesn't like Putin, period.
Yeah, it's really interesting.
This is the reality of wars. I mean, many social observers, philosophers, and so forth have always observed war is always done by people who benefit from war. And we know some of these people who benefit from wars because they finance both sides.
Yes, that's fascinating. So do you see a time where the US might be investable again, or do you think it will require the bursting of the debt bubble?
Well, I think, for the next few years, I argued already a year ago, for the next few years, it's not my idea only, it's also the idea of Jeremy Grantham of GMO, that assets will not give very high returns for the next few years. I think probably precious metals are okay if they don't take them away from you.
Mark, thank you so much for joining the podcast. Just my last question is, what is one message you want listeners to take away from our conversation?
Well, I think people misunderstand certain things. If you have a situation where most people go bankrupt or most people lose everything, and you only lose half, especially if you're still alive, then you have a certain advantage. I mean, relatively speaking, in a wartime, the one who dies, they lose. The ones who survive, they have some hopes. And I think if you look at asset markets, in general, when you have an asset bubble, if I look at 1980 to 2019, pretty much everything went up. Now, with interruptions and at different stages, Japan peaked out in 89. It's never made a new high. But if you were in Japanese bonds, you made a lot of money after 89. That's an example where I said stocks went down and bonds went up. But then there are periods when everything goes down. Like in the 70s, most assets didn't go up, but precious metals went up. But precious metals in 1970 were much cheaper than they are now, okay? Relatively speaking to other things. And so we may be in a period where the world for asset holders is unfavorable, also because of the growing trend of socialism and government debts, and government will increase taxation and so forth and so on. But if you and my neighbors and everyone in Chiang Mai, where I live, loses 70% of everything they have, and I only lose 10% or 20%, I'm like a king. It's much better to lose 20%, everybody else loses 60%, than to be up 10% and everybody else is up 50%. You understand? We're talking about relative values and relative performance. So if you can increase your wealth by losing less, but people don't think that way. They always think of making money when they should think, how do I avoid losing money? This is what I would like to say.
It's a great message to leave.
But the message, of course, people will say, oh, this is an old guy. He doesn't understand the new world. In meme stocks, you can make so much money in one day. Yeah. I want to just tell you, audience, I've been in the brokerage business for more than 30 years. And I have had an office in Hong Kong, which was open 24 hours, and people came in to trade gold, because in those days there was no internet, and we didn't have yet, well, after the mid-80s, we had fax machines, but people came, didn't have mobile phones. So they came into the office at night to trade London gold, 24 hours. Of all the traders, day traders I've seen, I did not see not one who made money. But I've seen many, they lost everything. I've seen people, they got margin calls, they came crying. They said, we don't have the money.
Yeah, I think that's a great message. And unfortunately, we've seen that quite a lot in the past year or so. But so thank you so much, Marc, again for your time. So we mentioned that you're the editor and publisher of the Gloom, Boom, and Doom report. Is that the best place that people can find your work and what they do? What you do?
Yes, under gloomboomdoom.com.
Perfect.
Boom, all in one word, gloomboomdoom.com.
It's a tongue twister. I'll put that in the description below. But Marc, thanks again.
My pleasure. Bye-bye. Take care.
Thanks. Thank you so much for listening. And if you enjoyed the episode, please subscribe and click the bell icon so you are notified when new podcasts are released. I hope you're leaving with some great value about investing, trading, and finance. See you on the next show.